This is Expert Advantage, a behind-the-scenes look at how J.D. Power experts help clients turn actionable market intelligence into strategic advantage. I'm your host, Michael Vermillion with J.D. Power. Today, I'm joined by Bruce Gehrke, who's the head of our lending intelligence practice here at J.D. Power. Bruce, welcome, and thanks for joining us today.
Thanks, Mike. I'm excited to be here and talk a little bit about lending.
Terrific. Let's just dive right into it. What's the biggest challenge that the industry is facing today?
Well, right now, a lot of our work focuses on the mortgage industry, and probably the biggest issue and impact to that industry, and it's been the same over the last 3 or 4 years, is affordability. And affordability is at record levels across the home ownership environment, both on the purchase side and also on the maintenance side. So what we have is a situation that's impacting new buyers for homes and also at the same time impacting existing homeowners as they watch the cost of everything assorted with owning that home increase year over year over year.
Okay, so you've got 14 years in this industry, 10 years with J.D. Power. And the work that you do with our clients, you're focused on how our data is shared, what our clients are doing with it, but really helping our clients focus on the outcomes they're looking for. So kind of given that expertise and that level of experience, let's just really kind of maybe double click on this key challenge. Why does this gap exist in terms of affordability? What are most companies missing about the dynamics underneath?
I think the biggest challenge is the industry itself on the purchase business, the origination of purchase loans, which is really the focus of the business right now. Interest rates have risen since their market lows about 4 or 5 years ago to a point which isn't all that problematic historically, but in respect to where interest rates were, it's about twice the level. So payments have increased dramatically. In that time, housing prices have also increased dramatically. And so you have this kind of double impact on the cost of buying a new home. The price is higher, down payments have to be larger, and the monthly payments required to maintain those homes are higher. The average age for a first-time homebuyer currently is 40 years old. And that's significantly higher than it was, say, 5 and even 10 years ago. And the challenge is younger people who are, at somewhat limited at this point in their earning careers aren't making the kind of money necessary to buy the average house out there. So that's the challenge the front side of the industry is facing when they're trying to bring in increased lending volumes. Traditionally, that side of the business is really transactionally focused. They were, optimized to really focus on getting a loan into the pipeline, moving it through quickly, getting it closed and moving on to the next one. And in this environment where we've seen the impact and what the industry still struggles to do is adapt that model to playing more of an upfront advisory role with potential home buyers. It's not as easy as it once was. It's not just walking in the door and applying for a loan and getting approved. It's really, really difficult. The purchase market is very challenging. Supply has been limited over the last 4 years. Not that many houses over there. There's bidding wars for properties. Prices are forced upward. It's really a more challenging journey than it has been in the past. And there's this gap out there for how borrowers can help, manage that process more effectively. And they're not traditionally haven't gotten that from the mortgage industry. They're just there to process the application and move on. And a lot of that interaction never happened until they actually had a home, they had an accepted offer, and they were in contract to buy, and then they started looking for a lender. Now what we're seeing is successful lenders are actually making contact early on in that decisioning process where potential buyers are actually deciding whether they're going to buy and what they're looking for. So they're helping that buyer form that opinion in their mind what is the price range that they want to be in, not just what they're going to qualify for, but what they can afford on an ongoing basis. And that's something where we've really been able to take some of the front end data that we collect from borrowers and really make it actionable for our client base. Understanding the type of information that they need, that they're looking for, and when to deliver it. And that's a key difference that a lot of lenders have been functioning on that basis. They're really, the whole industry, from the compensation of loan officers to the marketing efforts, is really focused on transactional efficiency and speed and numbers of transaction. And there's a lot less advisory built into that. And in fact, loan officers have often been disincentivized to spend a lot of time with borrowers before they're willing to sign an application. And that's something we've really seen change over the last couple of years. And it's one of those things that I think is exciting from our standpoint, is we've been able to play a role in helping lenders see that, react to it, and change some of what they're doing on the ground.
Well, Bruce, yeah, thank you. And I'm glad you were able to connect it back to JD Power data. So let me just double click on that for a second. Do you have any examples or stories? We don't have to name names, but something maybe where you have worked with one of our subscribers to really kind of get a handle on this, where this is played out, and maybe even an example of a client who got it right and what unlocked it.
Yeah, well, there's a couple. On the origination side, I'd say there's one particular client that we've worked with. They are what we call a direct-to-consumer lender. So their model is very platform-driven. They're acquiring leads through marketing efforts and other efforts out there, and bringing borrowers in from all over their place. The traditional model of retail lending and mortgage has been very closely attached to the real estate industry, getting referrals from that real estate agent when they have a buyer in place. And that's that transitional point right there. We've got a deal. We're going to close that deal. They need a loan. These folks have been able to uncover those borrowers earlier. And a lot of what we showed them in data from closed loan borrowers, where their preference for getting earlier interaction with their lender was been growing over the last 3 years, and it has really peaked recently. And we were able to connect that data with other operational metrics around loyalty, around their feeling for coming back, that recapture of the next loan, which is a key goal for the mortgage companies out there, is to not make this purely transactional. But we showed higher levels of trust, higher levels of satisfaction, higher levels of loyalty, higher NPS scores, all when they just interacted at that earlier point in their thought process. And that led them to focus more effort on uncovering those leads earlier. And what we've seen in the industry is consolidation that is really focused on this concept now, in moving up that sales funnel to get further up into that process, where people start to think about home ownership. What will it take? How will I do this? And starting to make that interaction at that point. And so actually bringing hard numbers to that question, is it really worth the effort and the investment in that early lead generation, was something that worked really well for them. And we've seen that now across the board, and a lot of other companies doing the same type of thing. I can't say we can take credit for the consolidation that's done around this in the industry, but it really is a concept now that is starting to take hold. And I think we were pretty much on the forefront of looking at that. That's something that we saw in our data, something that stood out. And it was something that went against the grain of the way most of the industry thinks about this. On the servicing side, the other part of this is we talk to servicers, and I have to commend the industry over the last 5 years. They've made tremendous gains on the side of treating their customers like real customers that they value, and they value that relationship. Traditionally, that servicing function was about collecting payments and getting on to the next one. But we've seen, tremendous steps, I would say, on providing other types of services to their customers, all wrapped around the homeowner experience. And recently, one of our better clients, which had a lot of interaction with, just announced a new partnership with a company called Matic, which basically delivers home insurance shopping ability to their entire portfolio of mortgage clients. This is one of the things that really challenges mortgage servicers, because they're in the position in 75% of their customers to collect those homeowners premium payments, on a monthly basis, and then they wind up paying those premiums annually when they come due. So when those costs increase, as well as property taxes, what they're collecting on a monthly payment increases. A lot of borrowers just don't understand that their fixed rate mortgage is only part of their monthly payment, and these other two pieces do change over time. And for most cases, they only increase and never really decrease. And so they're the messenger that has to deliver that message. They get that message. Customers are really unhappy about that, and they blame the servicers. Here's a servicer that went out and took that challenge and brought it into their own hands and said, well, we're going to help you manage that process. If you think that payment is too high, here's an easy way to challenge that and to shop homeowner insurance premiums out there. We'll help you get a better deal if that's something that works for you. And these are the kind of things that we've been talking about servicers for a while. We've been showing that the data supports what the borrowers are telling us is they're looking for a source from this information. And certainly this is a sort of a clearinghouse of all these different touch points with a homeowner, that the servicer can take that role and start disseminating valuable information beyond just how you make your payment every month. And we've seen a great impact on trust and satisfaction, that follows there as well.
So Bruce, let's talk a little bit about your role as a JD Power industry expert. So when you're sitting across from a client, either in person or virtually these days, I suppose, what dots do you connect for them that the data leaves disconnected?
Well, I've always tried to take that role in many different roles in the industry, and pretty much have experienced almost every different aspect of it, from origination through servicing, at different times with different companies. So I always try to take that side of the table, and I look at the data and try to understand really from our customers, not what the data tells us per se, but what they're looking to learn, what their business outcome that they really, really care about. And it's different. And it's different for different clients. Some are more focused, some are more transactionally focused. And so we have a strong set of transactional data, as well as perceptions and preferences and things of that nature. But really trying to make that data useful in a day-to-day operational sense. And I think I have a good perspective on that, having done most of these things at the same time. The heart and soul of the industry hasn't changed much over the last 20, 30 years even. I think we're on the cusp of seeing some changes now with the integration of artificial intelligence and some of the other things behind the scenes, but we're not there yet. And at the end of the day, it's still a people-focused business. And that's where JD Power really stands out from the other operational, data that's available out there for the industry. We have the best operational data from the borrower's perspective that anyone in the industry is going to be able to find. And more, we're getting what I would say an agreement of how we view the consumer from the industry. So they're moving kind of away from that really execution, transactionally focused thought, and believing that hasn't gone away, but they're taking to account that how am I really going to deliver for this customer. And I think that's made our data more valuable to them. And it's something that we're completely and always challenged on a day-to-day basis to keep looking for other ways to do that. But I think without the perspective from the industry, it's hard to do that, because you can get lost in the amount of data we have and the quality of the data we have. And in some cases, you really need to focus on what that client is looking for. And it is different from case to case and client to client.
Well, I wanted to make sure we covered business impact, but I think you touched on it a couple times in the stories that we've discussed. Higher NPS results, higher, better trust. So maybe we could just elevate it a bit and just, yeah, from your point of view, what's the difference between a company that operates on instinct and one that operates on evidence?
I think, and it surprises me, to be honest, how many companies operate on instinct.
Hmm.
And especially in a day and age where there's so much data available. What I think really comes into play is how do you use the data? There's so much data out there, but the ability to make it useful in the right way is I think where the value comes that we deliver. We really try to work with our client base from a change perspective and helping them manage change. It's a difficult thing. We all know that individually, organizationally, it's hard to change the ship once it's going in one direction. And especially this industry that has been so set in its ways for so long, very hard to get people to think and talk and take that step out into the unknown and try something different. But one of the key parts of what I think we deliver to our customer is being, an element in their ability to change. I think what really stands out organizationally is a culture that is focused on improvement, not just improvement today or year over year, but a constant focus on improving each and every day. And that's our ideal client because we have data that can feed that need on an ongoing basis. And we've, developed and we've adapted, some of how we deliver data. We're now doing it quarterly throughout the year, so that we really can work on an ongoing basis throughout the year with our customer and help them, understand some of the differences that they're not seeing in the data that they have. So we have tremendous, data that they're just not going to find. And we give them the context and the competitive context that they can't find, on their own. And I think that really makes the difference for those folks. And I think we've really found a group of firms within the industry that truly are focused on getting to the next level, but not just doing that, but where the company and where the business is going, not where it's been. And I think you're very difficult to do that if you don't know where the customer is.
Well, Bruce, based on this conversation and given your tenure in the industry and with JD Power, I get a sense that you like what you do. What's behind that passion?
Well, I spent a lot of time in all different aspects of the business, but I started in a very small company, which we built up fairly large, and we all dealt with the customer,
Hmm.
at some point. Everybody who was in the management of the company or everything. And that I don't think has changed. And really, this is a foundational part of the U.S. economy is home ownership. And when you see the challenges that are going on today, there are so much things that we could be doing as an industry. And as I'm a kind of an outsider, observer of the industry, but really we've become more than that. I think we advocate for that customer. We advocate for that first time home buyer, and they need that help right now more than ever. And I think this is a great time to share what we're learning, what we're seeing with folks who can actually make it matter to the industry and make it matter to those companies. So we naturally find each other in this process, and working together I think it's really driving better outcomes from those customers that are out there. And it's hard not to be, appreciate that and happy with that and excited by that, because working with those customers, there's nothing better than me seeing our customer announce a new initiative that we've talked about, for the last 3 or 4 months or so, and they're launching something. And that's a great feeling. And because we know the impact it's going to have on their customer base.
Okay, great. So Bruce, just to wrap up then, leaders are busy. If you had 30 seconds with one of them, I don't know if it's in the elevator or the escalator or whatever, but what would you tell them to either start, stop, or change?
I think this overemphasis on rate is problematic. It's driven the industry for so long. It's a cyclical business with tends to rise and fall with interest rates, but the customer doesn't live in that world, and this is the difference. From the inside out, it's all about rates, because that's what drives the business from the industry standpoint. But the customer only sees this part of that curve, that little bit, and it's not about rate. Yes, it's really important because that impacts what they're paying, but all the other pieces around it matter more. And when it comes to making decisions, rate isn't baked into it anymore, because that's evened out. It's not a differentiator. It's an important aspect to understand, but the differentiators really revolve around trust and how much that they feel comfortable with that lender. And if you're not focusing on that first and foremost, then eventually you're going to be out-competed. It's really what's happening right now. And that's what the guys who are forefront in what they're using artificial intelligence to do, is handle all of these back-end operational issues that the industry has focused so much on, so that they can, unlock basically their people to deal with people in a better manner. And I think that's really the most important point. Some are seeing it now, but there's still, that wave has not taken over the industry yet. And I think that tends to potentially leave some larger companies behind. I think they'll find themselves, challenged very soon, in this new and changing and dynamic environment.
Bruce, that was a great conversation. Thanks so much for joining us today.
Well, it's great to see you, Mike, and I always appreciate talking about this. As you can see, I could talk about this forever. So it's a great industry, and I think we're doing really good work in it.
And we want to thank our viewers and our listeners for joining us on Expert Advantage as well. If you're looking to turn actionable market intelligence into strategic advantage, J.D. Power's experts are here to help. I'm Michael Vermillion, and we'll see you next time.